I'm here with Boaz Weinstein of Saba Capital, and we're taping for an upcoming season of a new Bloomberg Originals series, Bullish. But before that, we are going to talk a lot about this market. It's a pretty incredible moment in markets right now. You've seen a two-day, very steep decline, both in equity markets, but also trouble in bond markets. When you look around, where do you think things go from here?
I feel like this is the first sell-off in many years. I have to think back, when was it different? Where enough people are wondering, is this a buy the dip? Maybe it's not a buy the dip. Maybe it's a phrase no one ever used before, a sell the dip. Because this is not going to get fixed tomorrow. I believe you cannot put the genie back in the bottle. The gravity of these changes are such, and we already see the reciprocal tariff now coming from China, and we'll see what happens this weekend, that even if it was undone, it would really destroy a lot of confidence that people have in their ability to plan, whether it's for a merger or for CapEx or for even just holding equities without knowing how some might be disproportionately hurt because they happen to source in Vietnam or versus Australia. And so I feel like this is a really, really important moment where people understand this is not just some sort of buy the dip opportunity.
Could you compare it to any other market moment, given that we have seen some declines as steep as since COVID? We have seen banks drop the most since the regional banking crisis, and same goes for the thing that you excel in, that's credit default swaps. You've seen serious widening to almost crisis levels. What is it compared to?
So in credit default swaps or in corporate credit, it all depends where you start from. We were starting just a few days ago from basically the lowest levels ever seen. And so the first thing to go was equities, which was not that surprising given how the Mag 7 had done. Credit kicked in pretty quickly. And now we're seeing dispersion in credit. We're seeing some credits, the ones more affected by trade, cyclicals, autos, even now banks, moving much more than credits that are traditionally more stable. So I think that just using a longer term historical perspective, and as somebody that manages money to try to protect against tail events, I have to think about 2020, 2012 with Greece, 2008, even more mild sell-offs, the flash crash, the sell-off in 2016 that was commodity related. This one feels very different because we also have lingering inflation, and so it will not be as easy for the Fed to throw money at the problem, or for governments to, when we already were coming out of this world where transitory and it wasn't transitory, that maybe they overshot in 2020 and COVID was like aliens came down from Earth and they needed to throw out their playbook. We have the legacy of Smoot-Hawley and what happened in 1930. This is really, really major, and you could see over the weekend something where there's the U.S. pulling back a bit, but the range of outcomes is so wide here, and markets started quite expensive, credit especially, so I think we could go a lot lower.
So when you say a lot lower, are you pricing in a recession at this point? What are your odds of a recession?
Right, so I'm not good at forecasting recessions, and I'm not sure anyone is, though I accept that there's probably some people out there, and it's not just coin flipping, but if you just take the wisdom of crowds, and we could take, the venerable Goldman Sachs was at 20 2 days ago, now they're at 35, and someone just went to 50. If you just take the aggregation of it, so if you use Polymarket, for example, Polymarket was in the 20s, which is already elevated. We did have an elevated chance of recession the last couple of years. That went into the 30s, and we've hit 50 now, and I think many people's base case for the first time is we are going into recession. And I remember when people worried about recession in the Biden administration, and they thought, probably won't happen, but if it happens, it'll be mild. You cannot throw away the real possibility that it is a severe recession, because there's so many changing parts and retaliatory moves, and Smoot-Hawley it was not the cause of the Great Depression, but it certainly accelerated how painful it was. And so I think about it in probabilistic terms. We talked about the probability of recession. There's also the severity, and the tails for how bad it can be are much fatter than in my prior experience when I was thinking about a slowing economy.
What does a severe recession look like in your view? What happens in that scenario?
My world's credit spreads, investment grade, so let's just take investment grade, which it was just 50 basis points using the liquid credit derivative index. It had never really been, since '08, lower than 48. We were at that kind of level, or 45. In the last few days, it spiked up to 75, but it's still very low. If I take the last 6 recessions, the range of how bad it got was 110 to 275. And if I go back even further to 2002, because these youthful looks should not convince you otherwise. I was trading credit in 2002. I was trading credit in '98 because of Enron and WorldCom, and that was its own thing in 2002. Investment grade got out to 300 or 400 basis points, and so when I think about whether we're only at 75 now, the roll down the hill, the avalanche, has really just started. And with equities, it's all about what are earnings going to look like. People today are saying, well, 17 times earnings isn't that bad because we were at 19. But what are earnings? Now we have to price in earnings declining because of recession and how severely. And so I really think that investment grade could easily go to 130, 150 basis points. It was 95, Sonali, December 2018. December 8, 2018, there was a skirmish between President Trump and Xi. That was a walk in the park, and we were at 95. So you could say, well, maybe that didn't make sense then, but 75 does not make sense now, and just yesterday was 65. So I think we are headed down the hill. I think it's going to accelerate. There might be something in between that stops the boulder, but I'm very concerned about a crash.
Does the Fed step in your view?
A lot lower. A lot lower. They're not there to prop up the stock market. They're there to protect Americans, and the protection is not going to be printing money or buying junk ETFs like they did during COVID.
Do you worry about stagflation?
I do. I was listening to Howard Marks today, and some of the great thinkers in the market, nonpartisan, some of them share great concerns that we have all sorts of risks. We have stagflation, recession. Really, for a volatility trader like myself, it's in some sense it's so interesting because the range of things that can happen is so broad, and you can try to find interesting trades to access those tails.
So how do you play this market? What works if you were setting up for more volatility, as you've mentioned, and potentially more declines?
Right. It's not too late to reduce risk. I look at, of course, the exit point, if you did so, would have been a lot better days ago. But this fear, to me, is something that only today, yesterday, we're seeing. We were worried for a few days, and now comes this news. It's not too late to take chips off the table and say, okay, I've given up in equities, I've given up a year of gains, or in credit, we're back at the 28th percentile instead of the 2nd percentile, right? But does this feel like a world that's on the better side of the 50th percentile? Doesn't this feel like a world that's on the worse half when you think about the known unknowns, the unknown unknowns, which are, of course, always present, but the range of them feels wider given the known unknown of how bad is this tariff war going to be.
You've seen junk bonds face steep sell-offs. You said it could get a lot worse. Do you think that we're going to look at a wave of bankruptcies as well?
It will take time, but it also could be quite a bit faster than other recessions, because if certain companies, let's say you source your garments in Vietnam, and now you have to pay this 46%. What are you doing? Like, how could you possibly pass that on to the consumer? And of course, we have the reciprocal move by China, which maybe we'll see other countries. So the hit, and I'll say one thing about that: the hit could be faster, and the bankruptcy rate could spike much faster than other crises. But also, credit curves. This is a little wonky, but the shape of the curve. Normally, we have upward sloping curves that the risk in year 5 is greater than in year 3. I think the risk in year 3 might be greater than year 5. And so in some sense, going to shorter duration things, like if you were in 30-year corporates, going to 3-year is not necessarily a good idea, because the pain, like we had with Greece, when finally it defaulted, it didn't matter if it was a 1-month bond or a 30-year bond. So I think credit curves are going to flatten.
What do you think the biggest long-term change is, given the escalation that you've seen from the presidential administration? What changes?
I think the change is that there were rules of engagement. You came into work every day and you said, okay, if non-farm payrolls went this way, this would happen. If up means down, bad news is good news. This is like, we're now on Mars, and gravity is different, and we don't know what's lurking behind a rock. And the rules of engagement, we have to basically, we're basically like Robinson Crusoe. We have to figure things out for ourselves, because it's a different world. And I don't want this to be exaggerated. Look, things could come back to normal. I just don't see how.
You made this great point to me before we started rolling about some of the reciprocal tariffs on countries like Malaysia. What do you make of that? How does that change the way that the Americans source their goods?
Yeah, so everyone has their their own personal country, where they look at that, whether it's where their grandparents came from, and say, does this make sense? And I look at Madagascar. So we were talking Malaysia before. Let's just take Madagascar, a country that has. So let's start with U.S. per capita GDP. It was about $70,000. We're very well, we're the wealthiest nation. $70,000. Madagascar. Pause your remote if you want to guess. $500. The average Madagascar person earns $500. We buy way more things from them. They have the greatest vanilla in the world. They have all sorts of commodities that we buy, that we source, gems, and they are very poor. So we buy a lot more from them than they buy for us. Now it costs 46% more to buy Madagascar vanilla. How could they possibly buy our Cadillac Escalades? They literally are earning $500 a year. So what is disturbing to me about what's happened is that we always think, the PhDs at the NBER or, the Fed, like the wise elders are going to do things that make sense. We may not understand why they make sense, but we know there's a lot of complexity. Think about a physicist giving a lesson and your eyes glaze over. Here, the way we go and see how these tariffs are calculated, you lose faith in the system because you realize that there are obviously other people that see it like this, but if they're in the administration, they probably didn't feel comfortable voicing that concern because it just did not, the way it's been done could not possibly make sense.
If he rolls back, if President Trump were to roll back some of these tariffs, if we do see other nations come to the table, do all your views change on this?
The markets will surely rally, but I think since we're in the beginning of a four-year administration, uncertainty, I had tweeted a message that you can roll back the tariffs. I don't think that's very likely, but you cannot put the uncertainty genie back in the bottle. And that's why even today we're seeing some banks cut, maybe they made the decision before this, but cut M&A teams because how do you look at all the deals that have been pulled. Some of these IPOs were probably pulled because of these conditions. Yes, if it's undone, could it come back? But the uncertainty is something that was not priced into markets before, and it's not going to go away.
Final question for you. You mentioned the betting markets a little earlier, election markets, right? For example, we've seen them really predict the future of the election, for example. Do you take those markets seriously, the prediction markets, when it comes to the recession odds? How are you using them?
So in 1992, when I was a summer intern at Goldman Sachs, my first project was to follow the US presidential election through the prediction markets, through the Iowa political stock market, and I've been very interested in them for 30 plus years. If you look at Polymarket as an example, you mentioned someone that kind of saw the election right, even though people accused, well, maybe it was some Republican that was buying it up. It turns out they were better than the polls. I'm very interested in combining because we always have unknowns. What's Facebook's earnings going to be? What's the probability of recession? Well, if you have a market that is where real money is at stake, and you have a price like 50% chance of recession. Now imagine that I pair that, okay, 50% chance something really bad happens to credit. What is priced into credit spreads? And what you can do with that is actually a pair trade. If one market is pricing in 50 and one's pricing in 10, right, you can sell the 50 and buy the 10. And so at Saba, actually, we're looking very closely at providing liquidity, using prediction markets as tools to make investments for our clients or put on hedges. You could think about it with the presidential election, as you said, but also even with the price of oil. Given a geopolitical war, people expect oil to spike. What do the prediction markets say the chance of that war is? So I'm really fascinated by what Polymarket is doing.
Would you create a whole strategy around it?
I really think at first it's a hedging opportunity. It's a way that if you knew that recession was not just in your model at 50, but you could lock it in, you can make position sizes much bigger.
Boaz, thank you for joining us. Of course, that is Boaz Weinstein joining us on the heels of a taping for an upcoming series, Bullish, that will be airing later this year.